Welcome to Understanding FIFO Inventory Costing with QuickBooks Online. My name is Seth David and I'll be your host for the next, I don't know how long it's going to be until I'm done. Now we have a few things to cover in this video. First, I'm going to show you, of course, how to enter the transactions, the purchases of the inventory and the sales. Then we're going to go over how to calculate the FIFO inventory cost. And then I'm going to show you how to get into QuickBooks and prove the number so that you can satisfy yourself that it's accurate. And maybe more importantly, if you get called out by a client questioning the accuracy of your cost of goods sold number, you're going to know how to prove it to them if you ever needed to. And there's one more thing we have to talk about, which is that it's come to my attention that some e-commerce merchants are receiving this one particular error that has to do with their FIFO inventory. So I'm going to explain what the error is, why it's happening, and what you can do about it. That's going to be all towards the end of the video. So let's dive in and let me show you what I'm talking about. FIFO inventory costing. First of all, what does FIFO stand for? It stands for first in, first out. And in many respects, this is the most accurate way of tracking your inventory costs. Why? Because when you think about it logistically, in most cases, you're going to want to sell your oldest stock first, which means the stuff you bought earlier or first is the first stuff you're going to sell through, right? When we stock the shelves, we take the older stuff, we bring it to the front, we put the newer stuff in the back. So it is the most accurate reflection of how we typically sell inventory in the real world, especially if you have perishable type items. But even if you don't, you know, the main concern is we don't want something getting really old sitting on the shelves. We want to blow it off the shelves as quickly as possible after we purchased it, okay? So that's the essential concept of FIFO inventory costing. So let's take a look here at a QuickBooks file. And I'm going to go through a series of exercises first to show you how this works, what this all looks like. We're going to record some transactions, and then I'm going to show you the journal entries behind the transactions in QuickBooks Online so you can really follow the flow of how the inventory costing works and, of course, how it's calculated, right? And we'll take a look at my little ledger in Google Sheets here, and I've already sketched out what the calculated cost is going to be. And then, of course, I'll prove it to you once we've posted everything in QuickBooks Online, and we'll confirm that QuickBooks Online calculates the exact same cost of goods sold on the sales that we're going to record. And so we're going to record this from scratch, right? So the first thing we want to do is I want to set up my product. So let's go into sales, and we're going to go to products and services. And we're going to be selling vibranium shields to Captain America, right? Because he's got a special mission in Gotham. Normally doesn't go over there, right? He's a Marvel guy, but they need his help over there in Gotham. So he's going to come, and he needs some backup vibranium shields. So the first thing we want to do is add that product. And we're going to go up here to the top right where it says new, and we're going to choose inventory item. And we're going to call it vibranium shields. Okay, and the SKU, we can put VS. I always like to put at least 3 characters in the SKU because a lot of inventory systems, you know, assuming at some point, if not already now, we want to integrate QuickBooks Online with some other inventory management system, or even the sales channel app that we might be using to capture the sales and sync to QBO. A lot of them require at least 3 characters to be able to pull it up properly in a search. So I'll just put VSU for vibranium shield units or something like that, okay? Don't need a category right now, but obviously if you accumulate a lot of inventory items that you're selling and there's a logical way to group them across categories, that's exactly what this is for, right? Ignore annoying items. That's to deal with these ones that you can't delete. They're kind of system items, and by categorizing them in annoying items, I can filter them out of the view when I need to. And then the class, again, we're not going to be using the class. Now the next thing that comes up is the initial quantity on hand. My advice, my humble opinion, is never ever use this because what it's going to do is whatever I take and say I have on hand, it's going to post an opening balance equity entry for the value of that inventory, and I don't want to do that. I always want to record the intake of inventory through a bill, even if it's existing inventory where I'm never going to record the purchase and never going to pay for it because, again, we already have it on hand from somewhere else. Let's say the owner is contributing that inventory. There's still a way to do it through a $0 bill, which is another video for another day, but just rest assured you never want to use this. And for the as of date, so I'm going to put 0 because it's requiring me to do something. And for the as of date, I'm going to backdate this as far as I can, because if you are if it's tempting to just put in like today's date if you think you're about to record the very first purchase of this item. I can't tell you how many times I've done that only to regret it, and wish I had backdated it to an earlier date, because whatever date I put in here, it's not going to let me post any activity for this item prior to that date. And I've gotten tripped up on that so many times that I've grown to sort of hate this one little field in the dialog. So I'm just going to put 01. I was going to put like 1971, but no. Let's just do 2020. Just someplace far enough back in the past that I know it's never going to interfere with me wanting to record any activity. If you have a reorder point, if you know that once your quantity reaches a certain level, it's time to reorder more, then by all means put that in here. The inventory asset account is always going to be inventory asset unless you have such a complex inventory structure that there's a good reason, and there'd better be a very good reason why you would want to choose to have more than one inventory asset accounts. Normally there's never any reason for any other inventory asset accounts, you know, unless you're like in manufacturing where you have raw materials, then work in process, and then finished goods. So short of that, one asset account. Now we come to sales. Now this is what happens when we use this item on a sales form, such as an invoice or a sales receipt, to sell the item. Okay, so you can put a description, you can put a standard price or rate. I'm going to leave those blank, and I already have the account set up. This is actually a standard account in QuickBooks that'll get created with any company that you set up. Sales or product income for my purposes today, that is more than good enough. Again, here you might choose to be more detailed in the chart of accounts as far as you know, the sales of different kinds of products. The way you want to think about this is where the amount that I've sold it for is going to show up on my income statement. So how do I want to be able to describe the sales that I'm deriving from selling products? Maybe I do want different categories of products, right? And I want that reflected so I can track how much revenue am I bringing in from each of these different categories, right? So that's something that I'm not going to tell you there's a right or wrong way. This is strictly based on how much detail you want to be able to report in your chart of accounts. Bear in mind that you can always get reporting on the items themselves, so it's a little sort of deeper in the infrastructure of QuickBooks Online. You can absolutely keep it minimal on your income statement. It makes the income statement easier to read and be very detailed in your products list. And like I said earlier, you can use categories if you really want to subdivide things into broader categories, right? So lots of choices there. Now purchasing is what we're going to use for when we've purchased the item. In other words, this is telling QuickBooks Online how things are going to show up when I use a purchase type transaction, such as an expense or a bill, right? And so here again, I can include a description, standard cost if I know there's a standard amount I pay my suppliers for it. And the expense account here is almost always going to be cost of goods sold. Okay, and then of course if I have a preferred vendor that I buy this from, I can certainly choose that here, and that will help save time later on, because it will just automatically assume I'm buying the item from that vendor whenever I do. I'm going to leave it blank. So let's hit save and close. Okay, and so now it's warning me right away that I have an item that's out of stock because I didn't record an opening balance. Remember, that was very intentional. Okay, it doesn't, I don't have an initial cost. I didn't add that. I don't want to, especially in this scenario where we're dealing with FIFO inventory costing. One of the significant reasons for wanting to understand how this works is when you're in a situation where, let's say your prices are volatile, so we're not always buying it for the same price. So sometimes I purposely don't want a standard cost in there because I know it's going to change a lot, and I don't want to run the risk of forgetting to update that cost that comes pulled in from the standard. So if I wanted to, I could start putting my products in their own category, and then I could filter out the category of annoying items. Like I would choose everything but this, right? But since not that important to me right now, I'm not going to bother doing it. So now you can see what we've got. We've got our vibranium shields and nothing in stock yet. So now we're going to go and we're going to start recording the purchases of these items. So we're going to record all of these purchases. We're going to record them each as bills, okay? So let's start with that. We're going to say new. I'm going to choose bill. Now, since we're a retailer, we have to we buy our supplies, our tactical supplies, from Wayne Enterprises because that's where most of the stuff gets made, right? So we're going to set up a vendor for Wayne Enterprises Inc. All right, and in the interest of time, I'm going to add this vendor very quickly. And what's funny is QuickBooks, by the way, when you're adding a vendor like this, notice what it's doing. It's trying to find actual companies that I might mean. And it's interesting to me how many people have stolen the name Wayne Enterprises from Batman. But anyway, in the interest of time, I'm not going to bother filling this out. Most of this is very straightforward. Obviously, if you just take your time, take a breath, and go through this, it's pretty clear exactly what to do here, right? So I'm just going to quickly create the vendor. This isn't a course on accounts payable, so I'm not going to get into terms and all that. I just want to get the bill entered so we can start getting the price levels in place here so I can illustrate how FIFO works, okay? So let's go to the ledger. The first purchase is on January 1st, right? So I'm just going to copy and paste that in from my sample data. I'll put the bill number for Wayne Enterprises Inc. -01. Obviously, you would put whatever number is on the bill you actually receive from your supplier, okay? Now here, very important, and it's easy to miss this because category details comes expanded and item details comes zipped up, and we need item details. When we are purchasing inventory, there's no ifs, ands, or buts. It has to be through the item details. And notice we have just the one item I've created so far for vibranium shields. And let's see, we were buying 100 of them at 500 a piece. So 100 at 500 for $50,000, okay? We're not associating this with any particular customer or class, right? So forget all that. And I'm going to hit save and new. Okay, because I'm just going to go ahead and enter in each of these bills. Then on February 1st, we purchased 50 more. So again, it's going to be Wayne. Again. Okay, and now I guess it kind of remembers that this is what we did last time. Now we're buying 50 more at $5.20 a piece. Okay, 26,000. Save and new. Okay, March 1st, another 200 at $5.10. So again, Wayne. 200 at 510 for 102,000. Save and new. We're going to skip the sale and come back to that. I just want to get all the stock at all the different price levels in place here. So next is a 5-1 purchase. And this time we got 150 at 530 a piece. For a total of 79,500. Okay, and now we're going to save and close because now I'm all caught up on my purchases. Okay, and now if I look at vibranium shields, I don't have the quantity category here. I should, so let's click the gear icon, and I want the quantity on hand, which is right there. Okay, and for some odd reason, it's not showing up here, even though I just recorded 3 purchases. Let's hit refresh. And there it is. So it says we have 500. Let's confirm that. All right, I bought 100, 50, 200, and then 150. So I highlight these guys, and way down here, my sum is 500. Always check your work, right? Especially when you're recording real transactions. It's always a good idea to check your work. You check for things like this. Pay attention, like I did, right? It should have shown 500. I knew it should have shown more than 0, so when I see 0, I'm like, let me refresh the screen. Sometimes these screens need a refresh. Okay, now we'll get into reports in a little bit, so I'll show you how you can run reports to see what the value is of the inventory. For right now, I want to take a look at what we've got so far, and then we're going to record some sales, but I just want to confirm that we've got everything covered that we need to up to this point before we get into recording the sale. Okay, so we've confirmed now that all of our purchases are here. We confirmed the quantity, and now I want to go in and record this one sale. And notice what's going to be happening. So we're going to sell 120 of these, which means we're going to sell through the first 100 here that we purchased, and then 20 out of these 50 here, right? This is the whole key to how to calculate FIFO is the first 100, our cost is going to be 500. Then in this case, the next 20, our cost is going to be 520 each. And as you can see down here, this is how I'm laying out the calculation accordingly, so that our total cost of goods sold after we record the sale is going to be $60,400. Okay, so now we're going to go record a sales receipt. Okay, under customers, sales receipt. Okay, the customer is Steve Rogers. Oops. And we're going to add him in as a customer. Again, I'm not going to waste your time going through the add customer dialog. Okay, save it. Okay, and then the sale took place on May 1st. Nope. The sale took place, we're saying, on April 1st. Okay, and never mind all this. Mainly I just want to get the sale on the books. Okay, we're going to deposit. We're going to assume the money goes right into our Continental Bank. How many are we selling? We're selling 120 for $1,000 a piece. Okay, $120,000 total sale. I'm going to hit save, and now we're going to confirm that my calculation is correct. Again, here's the total quantity sold. Here's the breakdown in terms of the different levels that we have to record it at. So we've got 50,000 plus 10,400. So the total cost of goods sold that QuickBooks Online calculates for this sale should be 60,400. Here's how you find out. So in the sales receipt, if I click more and click transaction journal, QuickBooks Online will give me the journal entry, which will confirm exactly how it's being calculated. So there's 50,000 cost of goods sold, 10,400 cost of goods sold. Survey says 50,000, 10,004, total 60,400. Now you don't see that number straight up because we're seeing all the debits and credits. So the grand total that went into the bank is 120,000, right? That's offset by the full amount of the income. Okay, we move 50,000 out of inventory, right? Because this is at cost. Over to cost of goods sold, we move 10,400 out of inventory over to cost of goods sold. So our debits and credits match, right? So this confirms it. But now we're going to look at some reports to just sort of triple confirm exactly what the value of our inventory is, remembering that it's now going to be the valuation of our inventory is now going to be reduced by the 60,400 that went into cost of goods sold. So let's look at a report that can show us this. Let's go to reports, and I'm going to, let's go to standard, and if I just type inventory in the search, we'll get the key sort of inventory reports that we care about. The valuation summary is mainly what I want to look at. Okay, and sure enough, what it says is I have 380 left, right? That's 500 less the 120 we sold, for an asset value of 197,100. Now notice what it does here. Right? You just saw the confirmation in the journal entry that I showed you that the cost is calculated based on the FIFO method. But for reporting purposes, when we run a report, it will show you the average cost. Why? Because to show you the FIFO cost, it would have to show you every layer ever purchased. Now, at this point, it would be simple because we literally just have a handful of transactions. But imagine when you have 10, 20, 50, 100 transactions, this would be impossible to not impossible to produce, but it would be unwieldy for you to even look at, right? So for purposes of looking at inventory valuation on a report, you're going to see a calculated average, and that's why also you see a long decimal place, right? Because it's averaging out all the costs. But when it calculates cost of goods sold, then it's a different story, and of course it calculates it exactly the way that I've described, right? So this tells us what the remaining cost is of the inventory on hand, okay? And we can test this, right? So our initial cost of inventory before any sales would be this plus that plus that, right? And actually let's leave it at that. So it would have been 178,000. Okay, then we have minus the cost of goods sold on this sale, right? So minus equals minus, I'll just use my mouse there. Right, that's what gets deducted from it. Okay, then we add that purchase. Okay, And so we're going to record this other sale in a second, right? But equals sum. Let's make these negative, right? I thought I did, but I did it twice in effect. So let's just do it like that. Okay, and now that increases it. Now equals sum. All right, 197,100. Survey says 197,100. Again, check your work, but also for the purposes of this exercise, I really want you to understand how QuickBooks Online is coming up with these numbers and how to verify it, right? So now we've verified it. Now let's record this other sale on June 1st for another 100 of them at $1,000 a piece, right? And then let's see how to cost this before we do it. So now we have minus 100. Okay, now remember, we've sold 20 of these, okay? So we have 30 of these left. So we're going to say minus 30 at the $520 price. The other 70 are going to be out of the next lot, which is based on this, the 510. Okay, that times that. Okay, so the total cost of goods sold on this one is going to be $51,300. Let's record the sale and see if I'm right. So new sales receipt. Again, Steve Rogers. Okay. Vibranium shields. 100. Notice how it shows me the quantity on hand here too, which is kind of cool. 100 at 1,000 each. So we enter 100 at 1,000. Total sale $100,000, and it looks like we're good to go. Again, I'm just going to click save here because then I want to check my journal entry to see if I calculated my cost correctly. Okay, now we go to more, transaction journal, and let's just wait for QuickBooks Online to finish refreshing everything. Okay, so we have cost of goods sold $15,006, cost of goods sold $35,700, $15,006, $35,700, total $51,300. Now let's run a profit and loss to see what the total cost of goods sold is, which again should be the $60,400 plus the $51,300, or $111,700. Let's just throw that total up here. That plus that. This should be our total cost of goods sold, right? Let's bold this, right? Our total sales, let's get rid of that, should be $220,000, right? Let's run a profit and loss. So we're going to go to reports and just look at a standard profit and loss. And this year to date, there's our $220,000. There's our $111,700. So now you see how it shows up perfectly on the P&L. I can click into this number and I can see each of the entries, right? Because notice what it does for each different price level. It records a separate entry for that price level's cost of goods sold associated with that sale, right? So that's an interesting thing to note, right? Notice the transaction numbers, okay? Also notice, because I did the sales receipts on the same day, that it's grouping them kind of funny. So let's fix that. This was supposed to be on 6/1, the previous sale on 4/1. So let's go into the later sales receipt number, fix the date. Okay, now it makes more sense. I see my two line items from sales receipt number 1016, right? These are the two cost of goods sold amounts. Two line items from the next sales receipt. These are the cost of goods sold amounts. So every price level that we sell through on a sales receipt is going to have its own entry for the related cost of goods sold, because that's how it's got to get calculated, right? Now keep in mind what this also means is every time you see, an entry like this, one sales receipt really results in two different line items for cost of goods sold. And this is going to be very important when I get to explaining to you what I mentioned in the beginning of the video that I want to explain to you about an error that's been coming up for certain merchants, and why that's happening. This plays in very critically to part of what's causing the issue, or at least what leads to it ultimately, right? So again, FIFO inventory costing will result in some cases in multiple sort of extra transactions in order to track FIFO correctly. So one sales receipt in these cases produces two different entries for cost of goods sold. If I sold through three different price levels, there would be a third one, and so on, right? So the more levels we sell through every time we sell, the more extra line items there's going to be in my transactions based on FIFO inventory costing. Okay. Now, what I would suggest you do at this point, if you're watching the video, is pause it if you haven't done so already, and record, the comparable transactions. Even use my sample data. It's there in the write-up in my blog on my website, so you can play with this and practice, and make sure that you can also calculate. Change up some of the numbers. Make sure that you can calculate cost of goods sold accurately, so that you can confirm your understanding of how QuickBooks Online is going to calculate this. Now, one reason why this is so important, and I've run into this firsthand, is you should assume at some point, if you're doing this for a client, if you're the bookkeeper and you're doing this for the client, at some point your client's going to question you on your calculation of their cost of goods sold when they look at their P&L. They're going to say, this number doesn't look right. And it may well not look right because they may be thinking of what their inventory costs them on average, right? Bottom line, my clients over the years I found had pretty good instincts for this stuff. So bottom line, expect to be called out on it. And you want to understand it at this level so you can prove to them by showing them, no, look, here's how QuickBooks Online calculates it. And you should be able to do an illustration very similar to what I'm doing here in a spreadsheet, and then prove it to them by drilling into that sales receipt and clicking on the journal entry, so you can show them, this is how I showed you it's going to do it on the spreadsheet, and the transaction journal here confirms how it's being calculated by QuickBooks Online. And bottom line, this proves that I'm right, right? And that's important. It sounds funny and almost petty, but the truth is you need to be prepared to be able to prove to your client that your numbers are accurate. With that in mind, let's take a look at and talk about this error that people are receiving. So it hasn't come up a lot, but it came to my attention through some colleagues that certain e-commerce merchants are getting this error. And the error, it'll say resolve QuickBooks business validation error : 6000, which to you and me is like, what on earth could that possibly mean? Here's what it means, and this is obviously to the best of my understanding, okay? I have not gotten this information firsthand from Intuit, but this is from people who've worked with Intuit a little bit on trying to get to the bottom of what's going on here, why it's happening and what can be done about it. So one of the things, if you followed along everything I just explained about FIFO inventory costing, you can imagine, let's say that I've recorded some purchases and some sales, and I realize, I forgot to enter this one bill for inventory from a few weeks ago, right? Well, based on what you just saw, you can understand that when I go and enter that bill for the purchase of my inventory retroactively, QuickBooks is going to have to recalculate every transaction from that point forward, because it's going to have to recalculate cost of goods sold, because that purchase that I left out impacts the correct calculation of cost of goods sold. So QuickBooks Online handles that perfectly. It will recalculate cost of goods sold on every sale that happened from that date forward, right? And for that matter, what QuickBooks Online has to do essentially anytime there's a transaction that impacts a particular item is reassess all the calculations of cost of goods sold from every transaction, assume from the beginning of time till now, right? So here's what's happening as I understand it, is apparently the threshold seems to be that when an item reaches a level of 25,000 transactions, and remember, like I showed you, depending on how many levels we're selling through, that's each one of those is like another transaction, because it's another line item, right? So, and I don't know for sure how transactions is being defined here, but let's assume each line item is like a transaction. Bottom line, very quickly, if I have a volume that's selling at that scale, I might approach this level of 25,000 transactions pretty quickly. And that seems to be where this error is coming up. And the reason is it's got, I mean, imagine, I just described entering one bill and with a short amount of history and what it has to do to recalculate that. Now multiply that by 25,000. There's 25,000 transactions where every time I enter the next transaction, it has to reassess and possibly recalculate your FIFO inventory cost for 25,000 transactions across the board to make sure that ultimately everything is accurate. So that is creating a problem, as best as I can explain it to you, where it's because of the FIFO inventory costing and the complexity in terms of how it has to constantly reevaluate and recalculate your inventory cost. Okay, so what do you do about it? For the first thing I'll say is, you can move to not tracking inventory in QuickBooks Online, in which case you would switch everything over to non-inventory parts instead of inventory parts. And of course, that means you would find another app that handles inventory management, which arguably, if you're selling at that scale, it's probably time to consider an add-on app that will handle complex inventory situations, apps that will deal with not just this kind of volume of transactions, but the other complexities that typically come up when you're selling at that scale, which is manufacturing, assemblies, those kinds of things. Like anything that further complicates inventory beyond the simple, I buy a quantity at one price and I sell it at a higher price and I need to see the profit on that. Once you get much beyond that level of complexity, it's time to think about an app that works with QuickBooks Online, and there are plenty of them that you can research right now. So that's one way. Let's say for some reason you just have some weird random thing where this one product just took off, went viral, but you're still not ready to move to another app for tracking inventory, don't want to go to the expense or any of that. Then the next option is you can just create a new item. Now the downside of that is you're breaking up the history and the continuity of the history of all the sales and expenses with regards to that item. But in theory, if you do that, you're basically going to start back at zero in terms of the new version of the item. So let me show you what that would look like if you wanted to do it. Let's again go to products and services. And I'm not going to see the whole thing through, but I'll show you very quickly. All you have to do is come over here and hit duplicate. And then you would rename this item, call it like old or version 1 or something, because depending on how quickly you think you're going to sell through another 25,000 of these, or hit another 25,000 transactions, you may need to do this multiple times, right? So just number it or something, and so that it's very clear which is the new right one to use and which is the old version. Obviously make sure then that you transfer the inventory from old item to new. But I'll tell you the quick answer would be that you would just record a $0 bill. Heck, I'll just show it to you. So let's record a bill. Okay, might as well use our supplier. And again, I didn't set up the new version to illustrate this fully, but we can see here I have 280, so I'm going to say minus 280. That's going to take it out of this item. Over here, I would add the new version of the item. That would be plus 280 at the rate of 530. Now we're also averaging out our costs, obviously, because that's what this rate is coming up as. It's based on the average cost. So we're also kind of crunching that together. So every time we start a new item, we're averaging out the inventory. So we're losing the actual FIFO history of that item's costing, right? So bottom line, not ideal, but it'll work, right? This is how you do it. This is a $0 bill, so there's going to be nothing to pay. It's not going to mess up your payables, and it'll get the job done. But like I said, there's definitely some downsides to that. Okay, last but not least, somebody threw out the suggestion that you could change the dates to make the calculation easier to run. But bottom line, I hate that idea. It can, first of all, it's going to get messy. Second of all, I'm not really sure how effective that's going to be. And perhaps most importantly, you're going to have a problem in terms of proper revenue recognition. You know, according to GAAP, generally accepted accounting principles, the proper date to show revenue on is the date that something shipped, right? So for example, if I get a pre-order of something from a customer, or bottom line, they order something and I can't ship it today, then I need to show that as a liability on the books, basically, until I can ship it. Once I've shipped it, then I can recognize the income and remove the liability and apply that to what they otherwise would have owed me. So that's proper accounting treatment for selling inventory. over the years I've run across some apps that don't give you the option of choosing to book the sale based on the shipment date, and anytime I see that, I'm out. Some would argue, well, I have small clients, I don't need to worry about that level of compliance. And my argument to that is you never know when the day might come where you'll have to. For example, some VC firm is looking to invest in your client and they require GAAP standards, right? And or a bank loaning money wants it according to GAAP, or best case scenario, perhaps your client wants to go public, right? So bottom line, I always err on the side of, being prepared for anything, which means I'd rather follow proper accounting principles for recording sales, even if I don't think it's absolutely necessary, especially because it's not that difficult to do. I just have to follow a few simple rules on stuff like this. So this, my friends, is pretty much everything I can share with you for now on understanding FIFO inventory costing, how it's calculated, how to record the purchases and the sales, essentially all the transactions you need to know how to record in order to manage this properly, the detailed calculation on how to get to what the FIFO inventory cost is, and this error that's coming up, not commonly, so unless you're selling a lot of an item, you're not gonna have to worry about this. My favorite choice is the first one, which is get an app that's really better equipped to manage more complicated inventory situations. And volume like that, I think definitely it's fair to say falls under the heading of more complicated when you're just selling at that scale. And as I mentioned in the write-up, if you are selling at that scale, it might be fair to say that you can probably afford the app. So anyway, as always, if you have any questions, comments, concerns, takeaways, feedback, whatever, just post your comments below wherever you happen to be watching this, and I will be happy to answer your questions as quickly as possible. As always, I hope you had some fun here. I hope you learned something along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you in the galaxy.